So welcome back guys to our next session where we are going to start off the previously. I hope you all watched the introduction class. For the recording students, I am talking to them. Anybody watching this without watching that, please go watch that first. We are going to start off with the first standard in our syllabus, which we will start today and complete by next class itself. 1.5 hours is the time for this exam. It can come in MCQ or a separate 2 marks or 3 marks question. In Inter this was called AS4, here we call it Ind As 10, events after the reporting period, guys. Okay, let's understand why we have this standard. Like I mentioned, why we have this before we even get into the standard in detail. Okay, events after the reporting period, Ind As 10. What is this in international? IAS or IFRS? IAS 10. Now it's called IAS 10. Okay, now let's take a financial year followed by what happens after the financial year. Now that you guys are in articleship, you can understand the standard much better than somebody without practical exposure. Financial year starts over here. Let's say this is April 24, for example. Financial year ends here. Let's say it is March 25. Okay. Now, after financial year gets over on March 2025, can I say financial statements are prepared immediately like this? Can I give trading P&L or P&L account and balance sheet and cash flow on 1st April? No, it takes time. Why? Why does it take time? Why does it take time to prepare? Everybody think, hello, I want you to answer. You have not audit. To prepare itself, it takes time. Sir, Tally is giving, SAP is giving. You have to prepare based on Ind As. Correct. So it takes time to prepare it. It takes a lot of time to prepare. How long it takes, those who are in articles will know how long it takes to prepare the FS. Imagine Reliance. They have to collect data from all the branches, all the subsidiaries, and then only prepare. How long it will take? 1-2 months or few weeks. So let's say by 31st May 2025, I hope you're connecting with the years. Why I am using futuristic years? Your exam is then only know, or 2026 or 2027. That's why I am using futuristic years. Okay. Now, so this period, who will prepare the FS? Auditor. Management is supposed to prepare. Sir, I am doing in articles, I am only preparing, sir. No. Management is supposed to prepare. Because management is not able to prepare, as an auditor, you are helping in reality. But it's not like that in a listed company. In Sun TV or in Reliance, auditor will not prepare. Management only will prepare. Who will prepare for management? Management will appoint CAs, industry. After clearing, you can go to industry or you can go to practice. If you go to industry, you will be in the accounts or finance team of Reliance, finance team of Tata Motors. Who will prepare the FS? Are you following, guys? Management will prepare and they will finalize the FS on 31st of May in our example. Who is the management for company known as? Board of Directors will finalize this. Are you following, guys? If it's a partnership firm, who will finalize? Partners. For partnership, Ind As is not applicable, but we have some limits. Okay. Board of Directors are finalizing. After this, what happens? What happens after this? Audit will start. Correct? So let's say audit is going on till 31st of July 2025. Audit will be done by the auditor. You guys are the auditors. More than auditors, articles only will do the predominant work of audit. And you will issue what, guys? Audit report. Correct? You will give the audit report. Why it's taking 2 months for audit? You know now that you are in articles. Are you going to work 10 to 10? Outstation audit if you go. Are you going to only work? No. You have to go and see the temple or nearby sightseeing, whatever is there. Sir, I went to audit for Delhi. You will go visit Taj Mahal and come. If you didn't visit means you didn't enjoy articles. If you go outstation audit, you have to go and visit places. So audit will take its sweet own time. Auditor will give audit report for which you are auditing paper, SA 700 series, all of that let's not discuss. Okay. After this, what happens? What happens after this? This audit report will contain, you know what all it contains, along with the FS will be given to whom? Shareholders. Let's say all the shareholders are meeting on 31st of August 2025 in the AGM of the company, where they will pass an ordinary resolution under section 114 of the Companies Act. AGM is contained under section 96 of the Companies Act, where they will pass a resolution to approve the financial statements. Correct? That means, follow guys, in other words, can I say financial data of this year reaches the shareholder almost 5 to 6 months after the year is getting over, which is into the next financial year. Correct? You are into half of next year. Are you following guys? So in this case, you are actually giving belated information to the shareholder. Correct? So it will take time. Shareholder will get data here only. Are you understanding timeline? Before I proceed, why financial year is April to March in India? Is it same in other countries? No, they have Jan to December, June, July. Why is it like this for India, April to March? Why? You never asked this question, no? Why can't it be Jan, December? Festivals. What festival? Jan, Pongal, New Year. April, March, no festival. Simple. In income tax, what's the financial year? April to March. That means income tax is paid for the income earned in April to March. Now, if I follow in accounts as per Companies Act a different financial year, then Companies Act will have Jan to December, income tax April to March. How will I compute income for the year to pay tax? So at least within country it has to be comparable. So every country, their financial year will match with their taxing year, tax financial year. Are you following guys? Okay. Sir, why financial year is 1 year? Why can't it be 2 years? Or in other words, I am discussing logic guys. Okay. Now why? Meaning, sir, why is it over here? Follow very carefully. Let's take two companies. Okay. Simple example. Jio in its year 1 compare to Airtel in its year 30. When Jio came in the first year, what they did? Free. Everybody took that free up. Now when I compare Jio in year 1 with Airtel of year 30, both financial year, what is Jio's net profit of year 1? 0. They are actually having loss, huge loss. Correct? Why? They gave it for free. They have expense. Airtel would have had profit that year. The profit making company. So when I compare Jio and Airtel that year, can I say waste Jio, invest in Airtel? No. All of you knew that Jio will have a good future. Today Jio has almost 40% market share. How many of you are using Jio? Close to half the class. That means same in recording. Okay, that means they have half the market share. That means comparing financial year to financial year doesn't make sense. That means comparing 1 year of Jio with 1 year of Airtel doesn't make sense. My argument is, let me compare 5 years of Jio with 5 years of Airtel. Jio manager will tell, now you won the race. Wait for next 10 years, I will take over you. Or another better example. Can I compare Airtel's financial statements and performance with L&T's performance? No, because L&T's returns comes in once in 5 years, once in 10 years. The projects take time. That means L&T, if they are starting a metro, they will reap benefits only after 10 years. How can I compare their 1 year net profit in the share market with Airtel's 1 year? It doesn't make sense, no. It's like comparing apples with oranges, the common analogy. So why should I take financial year as 1 year? Why am I in simple? My question is, why am I comparing all the companies in India's performance keeping 1 year as the benchmark? Understood question? No? Can I compare two students and tell he is good? No. You can't compare two people because each person's life journey is different. So how can you compare keeping benchmark as 1 year? Why? Why is it 1 year? Why can't financial year be customized based on industry? Are you following what I am saying, guys? Why can't financial year for an alcohol company, they take 4 years for it to be ready. So why can't financial year for an alcohol company be 4 years? Wine manufacturing, why is it 1 year? We need to have comparability, some consistency. So how did they select 1 year? The earth revolves around sun for how long? That's how 1 year was defined. So Warren Buffett says, I don't want this 1 year. When he is doing analysis, he doesn't compare 1 year to 1 year. He will compare 3 years versus 5 years to project the future. Are you getting it, guys? Off the topic, we discussed logic, but for exam, don't write earth is going around sun for 1 year. I cannot take this for comparing Jio with alcohol company. For them, for us it is 1 year. Okay. Come back to our example. Sir, okay sir, for me exam only important, sir. Let's come back to exam here. Financial year gets over. So we have 3 periods. Let me call this period A, period B, period C. Time period ABC, correct? So 3 time periods happens before the shareholders receive the financial statements, correct? Now, my question is, let's say in period C, company has debtors of 10,000 crores which has become bad debts. 10,000 crores debtors, one party, Vijay Mallya has to pay 10,000 crores, he left. So it became bad debts. Now in the AGM, assume this happened on 15th August, Independence Day, he left. Okay. Now, when he left on Independence Day, on 31st August, the financial statements will show debtors of 10,000 crores. But will you actually receive it? No. Why to show shareholder that? Can I make this change? Can I make the change in FS of something material before it reaches the shareholder in AGM? Yes. But this is happening in time period C. It's happening when, guys? Time period C. How can I change? Already FS is prepared, audit done, printed. Notice also is sent for AGM in section 101 of Companies Act. Notice should be sent 21 days before. So already I send the FS to you. How I will change this now? Are you following? In time period C, already prepared and audited. If I change, I have to audit again. How I will do it, guys? Are you understanding? So standard says, whatever is happening in time period C, I don't have an answer. I can't change my accounts for financial year 24, 25. In fact, I don't know what to do. Standard does not talk about what happens in time period C. For this, you have a standards in auditing. Which standard? SA 560. Subsequent events talks about what to do if something happens over here. I will connect our subject with AFM, direct tax, indirect tax and SAs wherever possible. Now it's important because of IBS. Okay. Are you following, guys? So SA 560 talks about this, not Ind As 10. Okay. Next. So C is excluded. What is the standard called? Name Ind As 10. Events occurring after reporting period, not balance sheet date, reporting period. Why not balance sheet date? Because reporting period is a more international term. Okay. So there are 3 events after reporting period. Event A, event B, event C, based on the time period that we have over here. Event C is excluded. Come to event B. Sir, event B, put yourself in that place where audit is going on. Now you are all articles, you can connect better. Okay. You tell me, once you start doing the audit, if the client comes and changes the trial balance, what you will do? You tell me guys, you are doing articleship. Okay. If the client changes the trial balance, what you will do? Get irritated. First of all, as auditor, we irritate the client. How, sir? Every week one meeting, Excel, points to discuss. Sir, 200 points, I want clarification, sir. We do that as an article, you feel good when you put more audit points. So always we keep questioning the director. We anyway irritate him a lot. Now, how can they irritate you? Turning off the AC? No, doesn't matter. I will still work, sir. I am an exam and all, you don't know how the exam center was. I am used to this. The only way he can irritate you is, for example, he will tell you debtors is 5,000 crores. How will you perform audit of debtors? If it's true or false, how will you perform? You tell me guys. This balance is 5,000 crores as of 31st March. How do you check it's true and fair? Auditing, true and fair, how do you check? Give me a few examples. External confirmation. That external confirmation is Rishabh, he is my friend. If you call, he will support me only. Now gone. What else you will do? How else I will check? External confirmation gone guys. That external person is my friend. How I will check? Subsequent transactions. After 31st March, within this period, has the debtor paid the money? I will search for an entry, bank account to debtors, meaning, hello, it is a debtors as on 31st March. It can't be debtors in the month of July also while doing audit. It should have become cash realized. If it is still debtors, April, May, June, July, 4 months he didn't pay. Are you following? Like this you will do audit procedure. Now after you did everything, the client is coming and saying, sorry sir, debtors is not 5,000, it is 5,500 crores. Day 31st July you are planning to give audit report. 30th night is sending mail, sorry sir, debtors is wrong. What you will do? What you will do? Extend the audit procedures. If they change once or twice, it's fine. Daily if they keep changing, I can't do a proper audit. Correct? So, if anything happens in this period number B, can I change the FS? Who can change the FS? Board of Directors. Management can change. So, can management change the FS? See, Ind As is for the management, not for auditor. Auditor will check if Ind As is followed. Management has to follow. So, can I change my books of accounts in period B, guys? Hello? Yes or no? If you change here, auditor has to re-audit again. How he will do? Imagine, like I said, 31st July is the audit deadline. 30th July, if you are changing, again I have to audit again. No? So, is it practically possible to keep changing every day? No. That is why I tell the management, take your time. Here you took how much time? Sorry, 2 months time you took. Correct? Here, that period. See, which period? This full period till the board of directors approved. So, what I am trying to say again, if I draw, if this is the financial year end, we are giving the board of directors one time, 1 month, 2 months till 31st of May in our example above to prepare the final financial statements, and then only auditor will start the audit. Whenever you go to audit, what do you ask the client? Give me the FS, ready FS, then I will start audit. So, if changes happen here, who should change? Auditor can change. Auditor found a mistake, classification wrong, asset you showed as expense, purchased laptop, instead of capitalizing, you debited to P&L, change that. So, changes here in time period B can be done by the auditor as audit findings. Management cannot change, correct? So, the standard doesn't talk about time period B, and also time period C is out of the scope of Ind As 10. Who talks about this? Loudly, recording, repeat with me. SA 560 talks about this. Are you following, guys? Clear? Okay. Then what is the events after balance sheet date or events after reporting period? 31st March to 31st May till board of directors are approving. Are you following, guys? So this standard Ind As 10 is not the same as As 4. Concept is same, but how to account is changing. If you think I know As 4, good to start, but conceptually lot of changes. Okay. So in this standard, understood logic. So this standard talks about what to what, guys? From the time when the year ends, or we call it as what period? Standard name. End of reporting period to, what is this, guys? Date on which financial statements are approved by board of directors. The standard doesn't use the term board of directors. They use the term, they don't use the word management also. Approved by approving authority. Why, sir? What if in this company board is not approving, CFO is approving, or somebody else is approving? Are you getting it? Are you following? So this time period, A in our example, A is from the year ending reporting period till approval by approving authority is within our scope. Are you following? In our 5-step approach for every chapter, we are done with the first one. Why we have this standard? Meaning, sir, what do you mean, sir? If something happens in this time period, the management is allowed to change the FS because it relates to the previous year only. What do you mean, sir? If as of 31st March my debtors is 5,000 crores and in this time period Vijay Mallya left the country, I can make my debtors as 0. Are you following, guys? Are you understanding? I can make my debtors as, sir, that means follow very carefully, guys. This is April, March, this is the time period A. 31st March is the balance sheet date. These balances can change based on what's happening in time period A, which is next financial year. That means what is happening in the next financial year in time period A will alter the balance as of 31st March of previous financial year. Because of the practical delay in preparing FS during that period, if anything happens, can you change or not is what the standard says. Are you following, guys? Sir, whether I can change, we will discuss. We have a lot to discuss. I am giving you background as to why this standard. Is it clear, guys? Otherwise, you will show 5,000 crores debtors. Vijay Mallya left. If you still show 5,000 crores, doesn't make sense. Better show as 0. Write off. Even though bad debts is happening in next year, I am writing off in this year. Are you following, guys? Future bad debts of next year, which I know it happened, I am writing off. Clear? This is the background. So what is the agenda, structure of this chapter? Okay. Just 3 things. I will keep it simple, guys. Okay. To give you a mind map. Okay. We finished the first part. Why? You tell me after we do 3-4 standards. Shall we follow this 5-step approach or no need, sir? Just teach normally. You will tell me. Oh, agenda, what to expect in this chapter? What are the events after reporting period? This only I already taught you. Okay. Events after reporting period. Okay. Are you following, guys? Second part of the standard is, if there are events after reporting period, how should I account for the same? How should I account for the same. And the last part is we have few individual key concepts, or in other words, these are known as different cases how to deal with it. Some exceptional cases how to deal. I am just giving you a broad overview, guys. Okay. So how the chapter will flow? First, what is events after reporting period? How to account. This is the fulcrum, main thing of chapter. Once this gets over, few individual concepts, few cases, unique cases. Once this gets over, we will go do sums. Once sums gets over, summary. That's it. Are you following, guys? Quickly, why do we have this chapter? For events occurring after reporting period till the date on which FS is prepared. If something happens, I am allowed to change or not. You understood logic as to why I can change? Because AGM is happening very late. Better to at least give him some updated information than asking him to wait till next year AGM when we already know it happened. Sir, in that case, B and C event also we have to change? No, sir, because it's before AGM. I explained why we can't change that also. Therefore, A alone we will change. Are you following, guys? Clear? So, what is the definition? I am not teaching anything new, guys. I am connecting what we learnt already, events after reporting period, with our material. I hope it's visible here, guys, for all of you. Look at this. Now I am going to summarize this from the knowledge we know. Events occurring after the reporting period, read with me. Events occurring after the reporting date is balance sheet date. It could be 31st March, it could be 30th June, any date, 31st December. Are those events both favorable and unfavorable? Unfavorable, Vijay Mallya leaving. Favorable, my company signed a new project with government for 1 lakh orders, 1 lakh products to be sold. New order came on 1st April, sir. Year is ending on 31st March. Can I include this as sales in 31st March? Yes or no? Yes in some cases, no in some cases. On the face of it, you will tell no. But it can become yes if it satisfies this standard. I am yet to teach you when yes. So both favorable and unfavorable. What are these events that occur between the reporting period 31st March and the date on which financial statements are approved by the board of directors in case of a company and corresponding approving authority in any other entity? Are you following, guys? Clear? Understand? That means this I already taught you or yet to teach? Already discussed. That means the scope of this standard is events from 31st March till the date on which board approves. Now you learned with logic. That means if anything happens here, I can change my FS. This is the logic. When you can change, I am yet to teach you. Can I change? In some case answer is yes, some case answer is no. Any doubts so far? Anyone? Hello? Let's repeat this definition alone loudly once, because in exam if this comes in 2 mark, 3 mark, we have to reproduce this definition. Quickly, events after reporting period, repeat with me. Events after reporting period are those events, favorable, unfavorable, that occur between reporting date and the date on which financial statements are prepared by board for company, approving authority for other entities. Are you following? Simple. Can you again repeat with me once? Recording students, don't look at my face. Repeat with me. Events after reporting period are those events, both favorable, unfavorable, from the date of reporting period till the date on which financial statements are approved by the board of directors or approving authority. What are these events? We are going to see in the next class or next session. If a merger happens, Vodafone Idea merged, Satyam scam happened, what to do if these things happen after balance sheet date? Imagine Satyam company 31st March they closed, 15th April scam opened up. What to do? If scam opens up, is it adjusting, is it non-adjusting? What is the accounting in this standard? We will do in the next class, and we will finish the illustrations and also start the next standard. Recording students can watch the next video. You guys, we will discuss tomorrow. Thank you guys. Before I close, I will always do this. Anybody has any doubts? Sure? Fine? Thank you. Yeah, thank you guys. Yeah, good morning guys. So today's agenda is going to be to continue from where we left off yesterday in the previous session. For those who are watching recording, it will be the previous recording. So it's simple agenda. I always start off with an agenda for the day. So those who are watching recording also can expect what is coming over there. We will first complete Ind As 10, all the concepts in detail, and then we will also go to Ind As 20 next and do concepts in that, and end of the class we will do sums in one of these standards, illustrations. Okay, that's the agenda, simple agenda. So let me just quickly start off. Yesterday we didn't spend much time on this Ind As 10, I think hardly 30 minutes. To give you a quick context, quick revision, follow up from where we left off. Sir, exam oriented, what should I remember in this standard from what we discussed yesterday? Logic and all you can leave it for exam over here. What should I remember? Very simple. After the balance sheet date, but be very careful, the standard is not using balance sheet date, they are using what data? Reporting period. I am using balance sheet date for our convenience. After balance sheet date or reporting date, until date on which financial statements are approved by the board of directors, if anything is happening, can I change in the previous financial year? Are you following guys? That's all we discussed yesterday. And I told logic why after this day, after financial statements are approved by board, we do not bother anything. We eliminated that concept B and C. This is what we saw yesterday. You remember guys. Now we will continue from that guys. Now the question is, yesterday where I would have ended the classes, everything that happens here, can I change? Can I change? Before I even teach the concept, let me randomly ask 2-3 examples from the common sense or little knowledge that you have from articleship, interdays. See if you are able to answer. Okay. Let's take a company. For example, we will take Satyam Computers. Okay. That's Satyam scam. That same Satyam. Let's go back to the year 2009 when the scam came out. Okay. What happened? Ramalinga Raju, nobody found the scam. He himself came to the stock market in live conference and he confessed, I did scam, arrest me. Okay, not like this but in a different way. Why? We don't know the reason. It could be whatever political influence or whatever. He came and he confessed by himself. It was difficult to keep the scam within. So Jan 2009 he came and confessed. After he came and confessed, the share price and all crashed within 1-2 days. But still company is not closed. No, company will continue. We have to find out and make changes. So on 31st March 2009, that year 2009, FS was prepared. FS was prepared by the company. Management prepared it for that year. And let's say after this, until the board of directors approve the financial statement, regarding the fraud, in this time more and more information is being found out. Are you following? Correct? No, because fraud was just found out over here. Fraud was happening for last 8 years. We only found out fraud happened here. The impact of that we don't know. So in this point, for example, I found out in this financial statements revenue was 800 crores. Here I found out, hey, 800 crores, he put 10 extra. It's only 80 crores. Now, can I come and change here? Yes. You can't tell, no, you found it next year, change next year. So this becomes what? This becomes an event over here, which is being adjusted in the previous year. So we call it as an adjusting event. Adjusting event. Are you following guys? Example number 1, we will discuss about 7 to 10 examples. Each example could be an exam question. I want you to focus mainly on understanding concept so that even if 100 questions come, you will be able to figure out the answer. That is the way I am going to teach the entire syllabus. Okay, next. Let's take next example. Okay, let's take Kingfisher Airlines. Okay, everybody knows Vijay Mallya, okay, did not pay the money, but until he did not pay the money, he was member of parliament, member of Rajya Sabha, if I am correct. Okay, if he goes to a bank and is asking loan, means bank cannot tell no. See, today if Ambani is going to SBI and asking loan, do you think SBI will tell no? They will just give it. Looking at his face, he was like that. He was the top 5 richest in India. Imagine, like that level. Okay, so let's say 31st March, we will take a company. Let's say Rishabh. Okay, Rishabh Limited. Rishabh is selling, let's say, some sports equipment to Vijay Mallya for playing badminton. Okay, so Vijay Mallya purchased from Rishabh some sports equipment. So in Rishabh Limited's balance sheet, Vijay Mallya is a debtor, correct? So Vijay Mallya has to pay to Rishabh, not big amount, just to 1 crore rupees. Sports equipment, how much he will buy? 1 crore rupees he has to pay. Vijay Mallya told Rishabh, I will pay, don't worry bro. Rishabh told, okay, thank you, fine, I'll wait for it. Then in the month of April, next year, okay, whichever year it is, next year in the month of April, Vijay Mallya took the flight and left to UK. Now Rishabh knows that he will not get his money. He will not get his money because news is saying 6,000 crores, 7,000 crores is not payable. He has no hope. He is not able to contact Vijay Mallya and team also. Now you tell me what is happening here. Can I adjust in my books? Can I adjust in my books? Yes or no? How many of you yes? How many of you no? Good. I like that mixed answer. Some of you yes, some of you no. How many of you I don't know? Last don't know means both hands, guys. Our class don't know means both hands, online also. Okay. Recording fellows, keep raising your hands. Don't look at my face over here. Okay. Now, in this case, I am not going to give the answer. You are going to derive the answer with the explanation. That's it. The whole standard is on this core principle. The whole logic in this standard is, hey, 31st March I have to prepare the FS. 31st March I have to prepare the FS. But I am not able to prepare it on that day because of some practical challenges of time taken to prepare FS. That is why FS is prepared by Board of Directors, let's say on 31st of May. There is a 2 months delay practically. So on 31st May, you are preparing balance as on 31st March. So it is balance sheet as on 31st March. Follow carefully. It's as on 31st March. That means as on 31st March means in the books if I have debtors 1 crore. As on 31st March I have to get how much? 1 crore. Even though I know in the future I won't get this. Correct? Now look at this. I want you to do a simple time travel from 31st May to 31st March. Okay. Now on 31st March, did you have a doubt? Did you have any doubt that Vijay Mallya will not pay? No. There was no clue, no information or no even smallest of doubts that he will not pay. Later, because a new event happened in the future where Vijay Mallya left the country, which was a completely new transaction, which if I prepared my FS on 31st March itself without the delay, it would have been full amount. Correct? It would have been full amount. Without delay, it would have been full amount. But in the Satyam example, imagine I prepared on 31st March only. No delay till board approval 31st May. Same day I prepared in the Satyam example. Still you know the balance sheet you prepared on 31st March may not be accurate, may not be true and fair, correct? Because a fraud took place, you know that this can change. I need more information to give true and fair numbers. Are you following, guys? Clear? That means in first example, fraud already took place. Something already happened during the year. Regarding that, in this time gap, you are getting more information, correct? In second example, during the year, regarding debtors becoming bad debt, nothing happened. there was no clue, but later something new happened that you never expected itself. Vijay Mallya leaving. So it is a new event, completely new event. Here, existing event plus additional evidence. So if it's an existing event plus additional evidence, you will call it an adjusting event. If it's a new event, we will call it as an non-adjusting event. Are you following, guys? So what you will do on 31st of March itself, and in our example 31st May, we are preparing, the board is approving, correct? So what you have to do in exam is, you can't do a time travel, but imagine you have the power of time travel because question has past and future data. So on this day, you have to do a time travel back to 31st of March and assume, hey, I am preparing FS today only. Same day, 31st March night before 12 o'clock, FS is ready. But I know what's going to happen in next 2 months. I wanted to do one thinking like this, hypothetically. So imagine today is 31st March, but you know the future for next 2 months. Hypothetically, guys, you know the future for next 2 months. In my balance sheet, okay, in my balance sheet, I had a stock, new example, third case, okay. In my balance sheet, I had stock. Let's say I am Apple, I have iPhones as my stock, closing stock. In this 2 months gap, fire came, iPhones were destroyed. Fire came, iPhones were destroyed. Now when I am preparing 31st March FS, can I write off my stock and show 0? No. Even though I know it is going to happen, as of 31st March, I had no clue about it. So you can't adjust in your FS, it belongs to next year only. But imagine as of 31st of March, already fire came during the year, okay, but I don't know the value of loss. Just 2 days back fire came, still the room is hot. I need to recover, maybe my iPhone is not burnt. In April first week, I found out some iPhones were saved. Now I can make adjustment. Yes. Are you following, guys? Clear, understanding? So simple, existing event, new evidence, we call it as adjusting event. Completely new event, we call it as non-adjusting event. Okay. Now let me take one more example. Yes. Doubt? Vijay Mallya example. Yes. We can't write as bad debts. Yes. Now, his question is, to repeat for everybody watching the recording, sir, we don't create bad debts for Vijay Mallya for 1 crore sales, but we create provision. No, sir. I create provision for all debtors, which is a prudent estimate. Oh, what if he doesn't pay? There is no doubt. Because of prudence, you create. Correct? That's not like, oh, he will not pay, so I will create. If the same question, Vijay Mallya is not responding to calls in the month of March itself, he is still in India. Some doubt came for you. So for other debtors 10%, Vijay Mallya you created 40% debtors. Now he left adjusting event. When you already had some doubt or some issue on 31st March, for that new evidence becomes adjusting event. Clarified? I hope recording also understood. Yes. Okay.
Transaction took place before 31st March.
Yes.
We can adjust.
Transaction took place means, see, balance sheet is on that day. Transaction of course take place, no. Because a transaction took place, we are trying to make modification. Transaction will always be there. Then, if I keep that analogy, everything will become adjusting event. Take one non-adjusting event. Fire came after 31st March. Fire came, what got lost? Stock. Stock was already there, no sir. I purchased stock, I will make an adjusting event. No. You can't do it like that. If you think in that angle, then every event will become adjusting event. Because already something is there in balance sheet. The whole concept of this standard is, something is there in balance sheet, values are changing, can I change? That only is the question. Last case before we go to our notes and discuss. As of 31st March, balance sheet is there. In this time period, there is an earthquake, there is a loss. Factory is there. Let's say we have a Nokia factory. Okay. Earthquake came, no more Nokia factory, gone, full factory collapsed. I'm just giving example, guys, not trying to be negative. Okay, now adjusting a non-adjusting event. Adjusting a non-adjusting. As per what you learnt so far, it is non-adjusting. But do you feel, how can this be non-adjusting? Anybody? Now why? Because as per what I have taught you so far, non-adjusting only. But building itself is not there. What next year? Adjust next year. There is no next year. Game over. Company close. What next year? So sometimes within non-adjusting we have cases. So I will show in the notebook in a minute, but I will write like this. This is the difference from your CA Inter. This had a different concept. I don't want to tell that now. We will see difference. In non-adjusting, if it is not material, what I will do? Nothing. Non-adjusting, not material, nothing to be done. Leave it. Deal with it next year. If it is non-adjusting and material, like for example, earthquake came, but factory is still there. One part of factory got destroyed, some 10 crores loss, but business is going to continue. But big hit like flood came. Okay, business is going to continue, but I got a hit. Okay, so this time what I should do? I have to disclose in my notes to accounts, because I can't change my P&L balance sheet. I can't change my P&L balance sheet, but think logically, guys. AGM is yet to happen, yet to prepare FS, something material happened. Okay, will you be like, okay, I will deal with it later? Correct. See, let's say exam is going to happen in 1 week. Something more important than exam has happened for you. You can't defer it post exams. Correct. So ideally we don't want anything to happen, but something important happened. Then you have to deal with it then. Correct. Okay. So let's take an example. Okay. Virat Kohli, while he was playing match, okay, long back, one of the test matches, if I remember 10 years back or something, Virat Kohli's dad passed away during the match. Now it is a material event for him, correct? But he continued to play the match. If I remember, he played that match and then he left. But it was material, everybody knew about that. So it's like that, if it's material, business is continuing, but disclose, tell the shareholders. So simple, disclose in notes to account. Last one, sir, earthquake came, factory gone. Therefore, what is being affected? Going concern is affected. In Inter, what you will study, here, if going concern is affected, you have to make it an adjusting event. No, we don't have that here. Not AS4, Ind As 10 says, if going concern is affected, I'll give a simple logic. I'll tell you why the standard is like that. That's so the beauty of learning. Sales, credit sales, everybody knows I can recognize 100. Isn't credit sales against the principle of prudence? They are teaching you prudence, don't estimate and don't recognize future income. But credit sales is against prudence, no? You are recognizing future income that is going to pay next year. You never had this doubt. You should have got in foundation. At least now you have the doubt. Simple question I am asking you. Prudence says don't recognize gain or income. Credit sales is basically against prudence. How can you recognize? Matching concept, no. Simple. Revenue recognition says if there is no uncertainty in amount, no uncertainty in ultimate collection, we will recognize. Okay. Accrual concept. Prudence is one, accrual is one. One reason why you are recognizing credit sales of 100 even if I didn't receive is because I will receive it next year. So it's a mix of accrual and going concern. I have a next year. Now, next year itself is not there, sir. No next year. Business is being closed this year. Will I do credit sales? No. I will do only cash sales, and if I do credit sales, I may not get next year because there is no next year. So the minute a going concern is affected, we don't prepare financial statements on accrual basis. Accrual is removed. because accrual talks about next year I will collect. We start preparing financial statements on realization concept, or in other words we use cost model, or in other words the standard doesn't use all these terms. Standard says prepare FS without going concern assumption this year. That means everything will be prepared based on cost basis. Inventory will be valued at cost or NRV, whichever is lower. Now you will value inventory only at NRV, because that is what I am going to get. We don't care about cost. Are you following, guys? So to summarize all of this in our note, previous session we saw events occurring, it is this gap, correct? These events can be of two types, guys, adjusting and non-adjusting. Look at the definition of adjusting: events which given additional evidence of a condition or situation of asset, liability or balance sheet date. That means situation, some situation already existed on balance sheet date, fraud happened. Now you are getting additional evidence, then it becomes an adjusting event. Are you following, guys? Clear? Non-adjusting event, new events relating to asset and liabilities after balance sheet date. Are you following, guys? Simple. I am just summarizing what we discussed so far. Within adjusting event, accounting treatment, change the respective asset and liability. Non-adjusting, no treatment in FS. That means this is the case where it is not material. If the amount is material, disclose in the financial statements, notes to accounts. Of course, whenever disclosure comes, don't ask me again and again, sir, what to disclose. You should have a little bit of logic over here. What to disclose means, for example, let's say you are getting back home or you are going for a trip. Suddenly you are calling your parents and saying, audit, I am going. You are going for a trip with friends. But what do you tell in the house? Audit. I have audit for 1 week. Okay. Your parents will ask, what audit? You will tell where you are going, when you are going, location, then what client, all the details you will give. Correct? So same way, if anything happens to users, tell what happened, material event, what is the impact of that, what is the amount of loss, okay, or loss, whatever. Sometimes you will tell parents, I am going for audit, I don't know when I will come back, return is not yet booked. So if you are not able to quantify, what you should do? Tell you are not able to quantify, disclose the fact. This is common in all Ind As, guys. If anything more is there, we will discuss. So look at this. Nature of event you will disclose, estimate, if you can't estimate, tell that you cannot estimate. And lastly, if it is going to affect going concern, where going concern is affected, the entity shall not prepare FS on a going concern basis, and reason why it is not a going concern. Are you following, guys? That means you will prepare not on accrual, you will prepare using realization concept. You will use realization concept. Investments valued at cost or fair value, whichever is lower. No, value at fair value, because I am going to close the business up. If I am going to close the business, how much I will get today? No more revaluing asset and doing upward revaluation. Hey, today if I sell the asset, how much I will get? Settlement, basically winding up principles. Are you understanding, guys? Clear? This is the core concept. Whatever we have studied so far is also there in CA Inter, except this second part. This part is little different. Okay. Whatever we are going to study from now for the next 20-30 minutes are new concepts in Ind As 10. Is it clear till now, guys? Everybody understanding what is adjusting and non-adjusting? When anybody any doubts here offline? Sure. Okay. Now let's proceed. I told you yesterday structure of the chapter. I drew one small chart. What are events occurring after balance sheet date? Then I told adjusting and non-adjusting events. Then I told some key miscellaneous concepts. Correct? That's why I gave the structure. See, I can't again draw the whole chapter. If you look at this Ind As 10, what is the scope? Events occurring after reporting period. That events is classified into adjusting and non-adjusting and its corresponding accounting. And I told key concepts are there. Now we are coming to that last key concepts. There are about 1, 2, 3, 4, 5. Some 6 concepts are there, guys. all individual concepts. Let me take it one by one. I will take a concept, you will give me the answer, we will go discuss. In the note I will show you where it is there. That's it. And with that, standard will come to an end. Following is, are you enjoying the subject? Hello? Yes, sir. Ind As FR is a paper to enjoy. It's actually, if you read, if you actually learn, start enjoying the subject, why it is like that, it's so beautiful. It's such a beautiful paper. Okay. Now, first one, which concept? Okay. I will take the same Satyam fraud. Okay. During the year 31st March 2009, till then Satyam no fraud. They showed revenue of 8,000 crores. Ramalinga Raju is coming in the month of April 2009. Year got over. April 1st is coming. April Fool. Okay, and he is coming and saying, we did a fraud. He came to stock exchange and he spoke. Is it adjusting or non-adjusting event? Sorry. Is it adjusting or non-adjusting? As per what you learned so far? Adjusting or non-adjusting? New event? No. You had no clue. As per definition, it's a non-adjusting event because it's a new event. Till 31st March, he never disclosed anything. We also didn't know. April 1st week is coming and disclosing. But it's a non-adjusting event which is affecting going concern. It is affecting, but Satyam continued. Some other company took over. Going concern not affected. But it's material. Can I just tell, disclose in notes to accounts, next year we will take care? No. So standard says, if there is a fraud, it becomes an adjusting event. It's an exception. Are you getting logic, guys? Here you can't tell, sir, it's a non-adjusting event, sir, but exception, material, we will disclose in notes to accounts, sir. Next year we will make adjustment. No. The standard says, standard doesn't say, guys. You have to apply the logic. Look at this. How to treat key individual concepts, how to treat fraud or error related to reporting period, which is discovered after the reporting period but before approval of FS. Treat as adjusting event. Are you following, guys? This is the first exception. Okay. Everybody with me, guys? Understanding logic of, see. Ind As was not drafted by God. Humans only drafted it. But 30, 20 or 50 years back. Clear? That means, now I told you yesterday's class, new accounting standards are coming in CA Inter. Who's drafting? Currently, who is there in the ICA Central Council and there's a study circles are there? CAs only are drafting. So if humans are drafting, we are all humans, you are also going to be CAs very soon. So you will also get the chance to draft law if you are interested in that. How to get interest in that? Once you qualify as a CA, ICA will keep sending mails to you. A new accounting standard is coming. Now a new accounting standard is being made for cryptocurrency. How to account? It is being made, it's in the drafting stage. So they will send you a draft and ask you, is this okay? You will tell, you can reply to them, no, these are not good. I don't reply, I don't have the time. But many members, out of interest, they keep replying. If institute feels you are very knowledgeable, they will ask you, can you join our committee in framing accounting standards? Okay. So we humans only are drafting it. Think in that angle. Don't think why it is there in the book. Think why it came into the book. That is the mindset I want you to change. Got this, guys? So fraud and adjusting. Same question. Sir, this is the day on which board of directors approved. During audit, auditor found a fraud. 143 subsection 12 Companies Act. Auditor found a fraud, or Caro has a clause of Caro clause. Auditor found a fraud. Now is it adjusting or non-adjusting? Are you following the question, guys? Every question is an exam question. It can come. I am teaching logic. During the audit, auditor Rishabh found a fraud. 143 subsection 12. 100 crores fraud he found. Immediately he reported. Caro also reporting done. Is it adjusting or non-adjusting? Hello? How many of you adjusting? How many of you non-adjusting? Any other answer? Any other answer, guys? Anybody? Standard itself not applicable. How many? Anybody felt that? Then why were you silent, Swati? Standard itself not good. She got it. Recording also, if you taught the same thing, good job, clap for yourself. Only Swati can clap. Clap for yourself. Clap, clap, clap. Okay. So why standard not applicable? The standard only covers this period. Beyond that, standard says I don't know, but we have other guidance. SA 560, all of that will anyway make it adjusting only, but not as per Ind As 10. Clear, guys? This is one concept. Clear? Separate, one separate concept. Next, can I scroll? Okay. Those who are watching recording, yesterday we had antivirus, something came, today we removed it, guys. So it's only one day. Just for few more days, those who are watching recording, I am consciously doing this. If you guys see, just tell me. Whatever I am writing in this space, recording fellows can't see because I am seated over there. That alignment we are going to change in about 10 days. After 10 classes, I can write everywhere on the screen, changing the setup. But till then, I am consciously not writing. But if you think I am writing, just put your hand, sir. They can't see. Okay, you guys can see. But recording, you are also going to get recording of, so you can't see what I write there. So can I scroll down, guys? Otherwise I can write here itself example. Can I scroll down? Okay, that setup we will change. Okay, fine. Next, case 2. Now let's take an example. Let's take a new student. Okay, behind Swati, Bhargavi. Okay, Bhargavi. Okay, now examples are only for classroom purpose to understand concept, guys. Nobody should take it personally. Okay, both sides. Now let's say Bhargavi has sent a WhatsApp message to Swati. Okay, do you both know each other? Now you know each other. Okay, so Bhargavi has sent a WhatsApp message to Swati at 7 p.m. whatever it is, some message, guys. Then she edited the message. Now WhatsApp has editing feature. Hello, Swati already read. Blue tick, I should change to blue. Blue tick came. Okay, Swati is yet to reply. She is yet to reply. Now Bhargavi edited at 7:05 p.m. She edited the message. Let's say first she told, come for the movie. They are going for a movie. Next she told, movie plan cancel. Night show they plan to go. Then again at 7:10 p.m. again she edited, let's go for the movie. Then I think I can edit up to some 15 minutes is there. 15 minutes. So we still have time. So 7:11 p.m. again she edited, cancel, movie cancel. Then Bhargavi again at 7:15, still time is there. She edited, let's go. Swati Pakra edited, change. Swati is online full time. Now editing is over. Now 7:15 over, movie is for 10 p.m. show. After this she did not edit anything. Bhargavi did not edit. Which one you will take? Finally, what is the message passed on? They are going to go for movie or cancel? Go for movie. Why? That is the last message. Correct? So as per this, now Swati will reply based on this message. Correct? If she replied of before means we will take that. Cancel out. She is yet to reply. So leave Swati's angle. In Bhargavi's angle, she made multiple edits because you have the feature of editing. So you will take the last thing. Correct? Now keep the same concept in mind. FS is prepared on 31st of March. Board of directors are going to approve. Now the board of directors Bhargavi, she approved on 1st May. Again she is saying, oh, there are mistakes, I want to change. Again she approved on 5th May. Audit yet to start, auditor is yet to come. See, don't think in our timeline, board of directors approved today, tomorrow audit will start. No, I drew the timeline like that, but approval can happen on 1st May, audit can start on 15th May, correct? Have you ever seen a timeline like that? No, because everybody will draw like water, same points, because exam it comes like that. But approval can happen 1st May, audit can start 15th May, 15 days, idle time, okay. Are you following, guys? So now 5th May again Bhargavi reapproved the FS. 12th May again she reapproved. 15th May again she reapproved. Board approved the FS 4 times. Which one should I take as the scope for Ind As 10? Which one? Last one, same logic. That's it. So you can do multiple approvals. Look at this. What to do if FS are reopened for any reason? When you will reopen FS, section 130 fraud, section 131 reopening voluntary, even that case of compensation. Otherwise, board leave those sections, guys. I reopened multiple times by board. You can do it, guys. No problem. There is no strict rule saying this is final. You can edit. Consider the final and last date on which it's approved by the competent authority. Everybody clear? Anand, understanding, guys? Okay. Bhargavi, clear? Okay. Can we proceed, guys, to next concept? Key point, simple. See how I gave you notes is simple notes. What, like a question, answer. That's it. This is what we need for exam. Logic I am explaining in the class. Okay. Now, next one. Concept number 3. These are all individual concepts, no relationship with the other concepts in this standard. Okay. Next. Do you know there is something called interim financial reporting? What is that? Is it like reporting on quarterly basis? Could be yes, or it could be reporting on half yearly basis. It could be reporting for 9 months. It could be reporting for 2 months also. Standard doesn't define. When we go there, we will discuss. But I just want you to understand there is an interim reporting. Or let's take SEBI for listed companies makes it mandatory to report every quarter. Why, sir? Otherwise, listed company year gets over on 31st March, AGM happens on 30th September, shareholder will know about this year only next year after 6 months is completed. Am I a fool to wait for 18 months to know about my company's data or 6 months after the year? Listed companies, public money. So SEBI says quarterly reporting, guys, which is there for last 20 years. If you are doing any audit of listed company, you would have gone for quarterly reporting in articleship. Okay, so many are there, fine. Now my question is, sir, I am preparing quarterly reporting, Q1, okay, correct? So what is Q1 time period? April, May, June. I am sure everybody is very aware of this. Now 30th to June is when the financial statements are ending up for quarterly reporting, and starting is 1st. So this is like my 1st April to 31st March, correct? Correct? Nowhere I mentioned in the standard accounting period or reporting period has to be 12 months. In all the examples we took 12 months. So in interim reporting, what if it is 3 months? Now is Ind As 10 applicable over here in quarterly reporting? That means my starting date is 30th June. When is the ending date? When is the ending date? Whenever it is approved by the board of directors. Only after board approves, auditor will do audit and they will publish. Sir, for quarterly also all that happens. Quarterly reporting also board will approve FS. Auditor will do a small audit. Essay, which essay, guys? One essay is there for this. Review engagements. Standards on review engagement, SRE. I missed the name, I will check and tell the name in the next class, remind me. We will discuss that name also. One standard is there for that, which says how to do audit for shorter periods. Okay. 4410. Quickly check, guys. I think SRE 4410. Just check so it will get sorted here. Those who studied audit, fast. If you have audit book, Rishabh. Correct? SRE 44. Review. What is the standard name? We are connecting, otherwise I won't spend time if we don't have IBS. Okay. Now I am also forced to learn auditing, direct tax, AFM. Yes, guys. Not for, okay, I will just check and tell in the next session if you are not able to find it. No worries. Okay. Keep this on pause, guys. Those who are watching recording, don't write SRE 4410. Leave it. I will discuss. Sorry, yes? SAE, SRE 2410. Standard is called? Perfect. Review of interim financial information. Interim financial information. Why I am giving these connects? Because of the last paper which is part of our syllabus. Okay. Perfect. Okay. In fact, I discussed with other faculties that once we all finish all our classes, we will sit together and take class for each other, where all connection is possible for IBS. So this is the one, SRE 2410, review of interim financial. So my question is, for interim FS, for Q1, can I apply Ind As 10? That means, will this be the start date of event and will board of directors date, will I take this, is Ind As 10 applicable? Loudly yes or no, guys? Yes, because Ind As 10 does not talk about financial year, it just talks about reporting period. So look at this, is Ind As 10 applicable for interim financial reporting? Yes, all concepts are applicable in same way. That's it. Start date is financial reporting date, end date is board approval date. That's all. Adjusting, non-adjusting, fraud, all that is applicable. Clear? Huh? That's it. Can we proceed? This SRE 2410, these connects don't find in the material, guys, because material is FR. We are going to discuss FR over there. Okay. Can we proceed, guys, to the next concept? Last two individual concepts we have, or three individual concepts. This is the fourth one, huh? Fourth one, 4, 5, 6, and that's it. Standard will get done. Now, to introduce this concept, sometimes for all of you guys, if you want to go out, sleep over, sir, with my friends, should you get mother's permission or father's permission or grandparents' permission, or just one person? Depends person to person. I can't expect one answer. For some people, if mother allows means enough. For some people, dad. For some people, both. For some people, grandparents. For some people, uncle. It depends person to person. Okay. Now imagine you have to get 2 approvals for anything. Or let's take more relatable example. You are an article. You want to do something to the client's FS. Client to the FS, you want to make some change. Your manager also approved. Who else has to approve? Audit partner also has to approve because you are changing FS. So what happens if there are 2 levels of approval? That only we have in companies. So there are 2 boards. One is board of directors and one more is called supervisory board of directors. Are you following, guys? Supervisory board. This is like a 1 level below the board to supervise the work that is going on. Are you following, guys? Clear? It's like, let's say movie, dance is going on. Main choreographer is there. But he will not come for the whole thing. He will just tell the steps. He will only be there when the hero is dancing or heroine is dancing. When other scenes are going on, his juniors will take care. Hey, just go do that. Finish it. Correct? Like that, we have a supervisory board also in companies. Not mandatory. Depending upon the organization structure, it can vary. I cannot tell this company has, that company has. Every company has their own different type of setup. This we will discuss in our segment reporting more. Okay. Now, if there is a supervisory board, board will also approve. Supervisory board also will approve. You tell me which one is final? Board. So which date I should take? Board approval. What to do with supervisory board date? Thank you. I will not consider in my Ind As 10. That means Ind As 10 talks about balance sheet date approval and board approval date. That's it. When is the board approval? Are you following, guys? That is the next concept, small concept. Look at this. Supervisory board, non-executive directors, where FS is given to supervisory board for secondary approval. It can be above us also. Okay, secondary approval. We will still consider the date of approval of financial statements for the purpose of Ind As 10, Ind As 10 as the date when FS are approved by board only. See, supervisory means not only below us, it could be above us also. Above us also, okay, meaning there is a choreographer in movie who is doing the whole thing, but for few steps he can ask the senior. Now, sir, then what, sir? Senior only we should take? No. Let me give you a classic example to understand this better. Article, partner of your firm, okay. Let's say you are in KPMG, your firm partner is there. Article had a doubt. You asked the partner, partner approved. But still you are feeling, no sir, in class I learned something else, it's not correct. So you confuse the partner itself. So what partner will do? You are feeling proud now, hey, I confused my partner. He will check with his senior. So KPMG, for example, might have a national partner, India head, or they might have some other bigger team. He will check with them. Now if this national partner also aligns with the partner, this decision is final. Otherwise this guy will change this decision, correct? So same way here, let me give you dates to understand this better. Let's say board of directors approved on 15th of May. Okay. Now it went to supervisory board. Supervisory board of directors approved on 21st of May. Which date will I take? 15th May only. Because if there is a change, again board will change. 22nd May they will change up. That means board is changing second time. That means I will take this as final. Board doesn't have to approve again unless supervisory board is going to lead to a change. We don't have a question like this in our study mat. Study mat simply says, hey, supervisory board is there means don't consider that. Just take only board. But there is an example which has date of supervisory board after board. I got confused. Hey, if supervisory board is superior to me, if they are approving after me, that only should be final, no. That means they are saying same thing as board. So nothing to change. But if these guys changed it, again board will change on 22nd May. Again supervisory board changed on 25th May. Again board changed on 31st May. You guys do all that nonsense, guys. Finally what I will take? Board approval date, final approval. That's it. For exam, what to remember? I am telling you logic. You tell me, do you want so much logic or I will be exam oriented? Which one do you prefer? Logic, fine. That means we will spend our time, that's fine. Sir, for exam in these 4 concepts, now exam oriented. 4 concepts we finished. Exam oriented, one by one. First one. Is this standard applicable for interim financial reporting? Yes, that's it. If I do multiple revisions, do it. Take the final one. Good. If there is a fraud, treat as adjusting event. If there is a supervisory board, very good. But I will still take the date approved by board of directors. That's it. Got the logic? That's all. Okay. Now we just have 2 more concepts. In fact, we have 3 more concepts left in the standard. Okay. But only 2 we will take. One we will do it separately because it has little bit of fair value concepts which today I don't want to take at this point. Next, let me take Ind As 10, carve out for you. I hope this is visible in the screen. Yeah. Okay. Now, I can actually finish this in a minute itself, but I want you to understand. Sorry, Ind As 10 carve out means what? This concept is there in IFRS, but we are not following in India in Ind As. Okay. What is the concept? I want you to read this paragraph and see if you are understanding. Then I will explain with the example I have. Just take a moment, read this, even recording fellows. Can anybody explain to me? Recording also try to explain. The whole point is for recording students to make you feel that you are in a face-to-face class if you can participate. Otherwise you fast forward by 30 seconds. How many of you understood? Anybody can explain? Yes, Rishabh or Anand. Okay.
And if at all we break it, so he can ask it for any point. If you break any point
Okay, he can ask it any time. Okay.
So that's like payable on demand.
Payable on demand. Okay.
And then we will.
Let me explain this and then I will show you the term. Let me explain. Two of them got it. Anand, Rishabh got it. Others, some doubt. Let me simply explain this with an example. Let's say Adani Limited, famous for what? Taking loans. One of the things. Okay. Cut it later. Okay. Now, 31st March, Adani Limited has one loan of 500 crores with, let's say, ICICI, okay, ICICI no need, we will change it to government bank, PNB, Punjab National Bank, okay. Now the loan says, this loan is a 5 years loan, assume now we are in 2024, so repayable only in 2029, okay. Till then you don't have to pay, it's a term loan, but PNB told there is a clause in the loan. If your debt equity ratio is going to exceed 10:1, already it's high. If it's going to exceed 10:1, then this will become a loan repayable like an OD whenever I want. So they are saying this will be a loan repayable on demand, meaning in Adani's balance sheet, this will be a long-term loan, non-current. We will show as non-current loan, guys, correct? We will show it as non-current loan, but if debt equity ratio is going to cross 10, PNB can ask them to pay whenever I want. You have to pay now itself. Are you following? Why risk? Risk is high, correct? So imagine in the month of March, we are in 25, this is 24, correct? Imagine in the month of March 25, debt equity became 12:1. Now this loan should be repaid whenever bank is asking, correct? So in my balance sheet, a loan which I showed as non-current will now become current liabilities because I have to pay immediately, but not needed if he is asking, if PNB is going to ask. So Adani went to PNB and told PNB, please, it's difficult for me to pay now. I know it's a breach, I made a mistake, I did breach of condition. Can you waive it? Can you let go of it? Can you be like, don't ask the money? So before board of directors approve, where the bank or the lender is waiving, the keyword is waiving the breach. Now I don't have to pay immediately, correct? I don't have to pay immediately. So because bank is allowing me to pay later, even though I did breach, as per accounting standard principles, non-current should be treated as current, but because bank allowed, if bank allows, I will still treat as non-current. So this event which is happening after balance sheet date will be an adjusting event. Are you following, guys? This concept is not there in IFRS. IFRS they are saying non-adjusting, but in Indian context our system told banks are supportive in Indian thing, they understand. So if it's a waiver of a breach, it becomes adjusting. Sir, for exam, what to remember? Now this is little in-depth concept. This is an important concept in Ind As 10. Okay, so in simple, can I write waiver of breach of a long term, waiver of breach of a long term contractual arrangement is an adjusting event if waiver is done before board of directors approve. Can I say something like this, guys? I am just trying to simplify. Waiver of breach of a long-term contractual arrangement is an adjusting event if waiver is done before board approves. Anand, makes sense? Clear? Sir, I am still not able to understand. What we are going to do in our material is, see, in every standard there will be 2, 3, 4 or 5 or 10 concepts which are difficult ones. So our notes are only so much. That's it. 2 pages for Ind As 10. That's it, enough. But this one concept, maybe again day before exam you might get confused. So our material is called what? FR, Ind As intelligence. So for like these concepts we will have a separate same material only, annexures to our material. Once the standard gets over, I will keep something called Ind As 10 carve out concept intelligent explanation. That means detailed explanation how I am going to teach one LKG student. I am going to teach. It's okay. You learn in detailed way. It's fine. Not for all concepts. Like how I am teaching you in class now. That is word by word breakdown of the concept intelligent explanation. What is long term arrangement? What is material provision? What is a breach? What liability payable on demand? Agreement lender not to demand payment. What is adjusting event? First the concept explanation. I am not going to go through this. That's what I told you now. Next example. Loan. Here debt equity ratio. Consequences. Lender's response. Bank decides not to demand payment. Then accounting treatment. In this example we chose December 31st. Then final statement. Impact, and then finally in summary, this only you wrote in notebook. Waiver by the bank of breach is treated as an adjusting event. You understood now, but later if you forget, you don't have to spend again half an hour to watch the class. If you are able to read this intelligent explanation, you are sorted. Are you following, guys? Expect this only for key concepts. What key concepts which are complex, which I feel it is complex. If you want me to do this for some other concept, it's not that, I will do it. All this print offline will get. Those who are buying recording, depends on which website you buy, mostly our website only, but you will have 2 options, recording with hard copy, without hard copy, because some people prefer soft copy. That's why the price difference, whatever is there, guys. Okay, following, guys, but all of this soft copy will be given, nothing for you guys to worry about. Okay. Fine, clear. That's why we are calling our book intelligent. FR Ind As intelligence. Yes.
Sir, if waiver is done by the bank, if it already it is classified as non-adjusting. Yeah, after waiver also we can adjust it as non-adjusting.
I did not get the question. Sorry. If waiver is classified as non-adjusting.
No, before the waiver, it is long-term non-adjusting.
Before waiver, it's long-term non-adjusting. Okay.
After the waiver, also we can adjust it as
After waiver also, can we adjust as, treat as?
long-term.
Okay. Your question is, okay, her doubt is, sir, before the waiver also it's treated as non-current. Now also can I treat as non-current? Yes, if bank is giving the waiver. Otherwise it becomes current as per 31st March. That only is the concept. Okay. Understood, guys? Okay. Now, sir,
But then what will adjust?
what we'll adjust is, what was treated as current will again go back to non-current. No. See, if this waiver is not there, follow very carefully. If the waiver is not done, a non-current loan becomes a current liability because you have done a breach. But bank is saying it's okay, your Adani, it's fine, I understand. So again, current will now be treated as non-current adjusting event. You are adjusting current back to non-current because bank is allowing. It depends on the bank again. Following?
Then what is the provision for? Because the bank is supportive in nature, is what the context was.
Yes, bank is supportive in nature. Yes.
We should have classified as current.
Yes, we should not treat it as current. What is current? You should pay within the next 12 months, payable on demand. But bank is giving in writing, no need to pay. Even though it's a breach, I am okay. I will treat it as a long term only. So I will treat it as non-current. In intelligent notes I would have given, it is very much dependent on what the bank says. See, if the bank has agreed not to enforce the demand, if they are saying no, then we have to treat as non-current. Are you all clear in this concept, everybody? 100%. Feel free to ask your doubts. It's okay if we spend time, guys. But whoever is watching recording here, how many hours you are spending? It's like you should understand in depth. You are spending the time. Every class you watch is you could have finished one movie. Correct? One movie you could have finished. That means you are spending that much time. You have to think in that angle. Okay, fine. Intelligent explanation is nothing but what I do is, I have told in the first class itself, sir, is this ChatGPT copy paste? No. I use ChatGPT, I use Gemini, I use so many AI tools. If you are not using, you are just left behind, guys. I can't do anything, I am sorry. You have to use AI, guys. Otherwise, it's like when calculator was introduced, some people told, I won't use calculators. What happened to them? Gone. Everybody is using. So you have to start living with AI. For all my YouTube videos, thumbnail AI will do, description AI will do, tags AI will do. I will just copy paste from AI and I will check if it's correct and do. So what I will do is, it depends on the prompt. Okay, you have to ask the right questions to ChatGPT or Gemini AI. I pay for it. I pay for ChatGPT. It's not free version. And you have to get the right prompts, get that content, then apply my mind and do the edits. Because if I copy paste as it is, ChatGPT can give wrong answers also. Are you following this? Once I asked ChatGPT long back, in 2013 Champions Trophy, India won or lost? It said India lost against England. I am not joking. I have the screenshot also with me. So I am very careful. I check the facts and all. But I take support of AI, and you should also take support of AI in all your, not just studying. In articles, it will save you a lot of times, guys. How many of you are already using AI for PPT? Good. Others keep preparing the PPT and waste time. Okay. PPT, 5 minutes it will get over. That's it. Then proofread. That's how it's going to be. Okay. I don't know if you saw yesterday, official news, I'm not joking, in Saudi Arabia, one heart transplant or liver transplant for a kid was performed by AI based robot fully without a human doctor present in the operation theatre. In one hospital there, human was there, doctor was there in some other country seeing in system. AI only, the robots did the surgery, cut open, transplant of liver or heart, I think heart transplant or something, AI did it fully with, that means if heart transplant AI can do, why can't I use AI for making notes? Hello, are you following, guys? Clear? So don't comment, sir, what sir, you are taking ChatGPT class. No, I am trying to use ChatGPT to do it better. Okay, done, guys. For example, sir, where else have I used ChatGPT? I won't tell in all standards. For example, Satyam scam example. I had to think about examples. I searched in ChatGPT, got 7 examples. Satyam felt apt, so I picked it. Like that. Okay, fine. Now, but some, not all examples, guys. Few. Okay. ChatGPT cannot give me Bhargavi's example. Sent messenger, editor. No. Fine. We are done with supervisory board and carve out. That's it. Last concept before we close. One concept I am not discussing now. Next video for recording for you guys also within next 2-3 days. Distribution of non-cash assets to as dividend to equity shareholders. Detailed discussion we will do separately. That concept we are not discussing in this video alone. Immediately next video recording can find. Okay. Last concept, dividend declared. With that, the last concept is over. Concept 5 or 6? 6. Dividend declared. Forget about the terms in books, guys. I will give you a simple logic. Dividend can be declared for equity shares and preference, because now you are at a stage where you don't know financial instruments, but you all know equity and preference shares. Now, preference shares, dividend is mandatory or optional? Even if you don't pay, it gets accumulated, cumulative preference shares, and you have to pay next year. So, financial instrument standards treats some types of preference shares as a liability. Forget the core concept, it treats as a in the nature of liability. So if you declare dividend on preference shares, treatment is different. If you declare dividend on equity shares, it's only optional. No, it's not mandatory. Even if I have profit, I can choose not to declare. Treatment is different. Here I have treated as equity only. So treat it as equity only. So here the treat, when am I declaring dividend? Follow carefully. April, March. If I declare dividend during the year, will the standard be applicable? No. During the year, now, see, when the standard is getting alive, after the year gets over, till board approval, that means the whole standard is saying, if anything happens here only, I am going to wake up. So if dividend is declared during this period, if it is for equity shares, they are saying the logic is dividend is declared here after the year ending. As of 31st March, I never knew I am going to declare dividend, correct? It's a new event, so it's a non-adjusting event, but it's material, therefore disclose in notes to account. Notes to account. Are you following logic, guys? Happening after year ending. Equity dividend is optional. I don't know if I will declare. So it's a new event. It's non-adjusting. Non-adjusting material. Disclose in notes to accounts. Imagine preference dividend is declared over here. Is this a new event? Existing balance sheet preference shares is there as on 31st March. I have to declare. Hello boss, profit means you have to declare. You don't have an option here. So you will recognize the liability in books. Sir, you are scribbling, sir. I want neat notes, sir. It's there here. You can read it. I will again show the same thing. Dividend declared for equity instruments within the same period. Do not recognize liability. However, disclose in notes to accounts. Dividend declared for redeemable preference shares after reporting but before approval. Recognize liability as it's a financial liability. Simple. Equity shares means non-adjusting material. Preference means it becomes adjusting because it's an additional evidence. That's the logic. Are you following, guys? Clear? Don't give importance to this. Sir, financial liability, equity instruments. This is little bit from financial instruments. I have given you a simple way. Equity na what to do, preference na what to do. Clear, guys? Are you following? Concept number 6, easy. Anybody has any other doubt so far? Okay, doubt is, sir, what if it is non-redeemable preference shares? Not possible. Section 55 of Companies Act says preference shares have to be redeemed within 20 years. Infrastructure companies na 30 years it can go. So we don't have a concept of non-redeemable preference shares. Okay, clear, guys? This is not final, inter. Okay, next, this concept only I am not teaching now. Distribution of non-cash dividend. I will just tell the brief. I am the company, Sun TV. Kalanadi Maran is the chairman and also shareholder. Instead of giving him cash as dividend, I am giving shares. How, sir? Possible. Section 123 Companies Act says dividend should be paid only in cash. No, sir. We are okay with it. So I am giving shares as dividend, which he will sell in the future. How to account? Simple. Company is giving shares as dividend. Non-cash dividend. How to account? We will discuss in a separate 30-40 minute session. Beautiful concept with a sum we will discuss. One exam sum itself we have. Nice concept. For this also there will be intelligent notes. Lastly, now read all these examples and tell me if you are understanding why all these are examples of some non-adjusting event. Why I put this over here. Study mat has this. Copy paste those points for you to be familiar. Look at this. Business combination after reporting period. Vodafone Idea after 31st March. Announcing plan of discontinuing operation after 31st March. Destruction, major business restructuring, major share transactions. All these points just go through, fairly simple. Unless these are material, then you will disclose in notes. If this is going to affect going concern, then it becomes an no, that is inter. If it's going to affect going concern, FS will be prepared without going concern assumption. Don't write going concern affected, na non-adjusting becomes adjusting, gone. He will send you back to inter. Following, guys, you have to prepare without going concern assumption. Clear? Understanding, guys? With this, we are done with what? Ind As 10. Concepts is that I told you our standard has 5 ways. Why the standard is over? Structure is over. Concepts is over. sums are pending, and then final summary. Final summary I won't do now. Remind me guys, when I do that distribution of non-cash, once that gets over 10 minutes, one full summary. End of every video or end of every, that's when I do final summary, standard is done. That time only I will do it. Clear guys? With this, we are done with the Ind As 10 concepts. Okay. Before we go to next standard, do you guys want to proceed or you want a short break? You guys decide guys. Okay fine, we will have a short break. Thank you guys. See you all in the next session.